Hello everyone, welcome to my YouTube channel. I'm going to be doing a chart breakdown on gold. I'm going to be explaining how to scalp right with the CRT strategy on gold, because gold is the most volatile asset so far, and if you are a beginner trader, I would advise you not to even think of it, because gold will just take your money for the vanishing. Okay guys, I'm going to be explaining how to do scalping right on gold using the CRT, our favorite strategy. Okay, I'm going to be doing this live with you guys and explaining it so that you guys can see how probably you guys can also be trading using this particular strategy on your own trading account. Okay, the first step is going to be for you to first know the time frames and the alignment, how they have been aligned. The time frame in which we are going to be using for this scalping strategy are 5-minute time frame and the 1-minute time frame. These are the two time frames in which we are going to be using for the scalping, and then we are going to be setting rules right on which we are going to be using those rules in order to to like let's say control our trades right. Whenever you are trading this particular time frame, that is 5 minutes and 1 minute, you need to ask yourself, which candle am I trading? That is the first question you should ask yourself before you should even think of trading CRT. Before trading CRT, ask yourself, which particular candle am I trading? So when you are able to answer the question, then you can probably be able to trade CRT. And then any CRT that doesn't combine with a key level, then that is a low probability CRT. A good CRT trade will not stress you. It has to be clean, as perfect as the one in your textbook before you actually take the trade. Okay, let me take an example. This is gold on the 4-hour time frame. Okay, looking at gold on the 4-hour time frame, you can consider this candle as a trading range, because the previous candles actually swept the high of that particular candle. So you can call the candle as a CRT, right? Okay guys, you can see that this is our candle range, right? Okay, this candle range actually got manipulated above, that is a rejection above took place with this bearish candle, right? And then the market makers then close below that bearish candle, and based on the notes I explained to you guys on other blocks, when a candle gets engulfs, then the candle automatically is going to be our key level. So the candle is our key level. So you can see this bearish candle, this bearish candle with this bearish candle engulf this rejection candle, right? And then it came back to that specific candle. Okay, what do I do when I see that the candles are let's say making a correction towards the candle that took the range high, right? Because this is basically what I used to explain under range trading. When the market takes the range high, then we expect it to go towards the range low, and the candle that took the range high, you can use that candle as a key level. I always explain it to you guys. Okay, when the market entered inside this rejection candle, right, which is our key level, so let me put 4 hour 4 hour key level so that you guys can actually see how to apply the same concept on your own trading, right? Okay, this is our 4 hour key level. Okay, what I simply did was, within this 4 hour key level, I went to the this is the candle that tap into it here. I went to the 1 hour time frame. Okay, this is the 1 hour time frame. Okay, okay, you can, my job on the 1 hour time frame was to look for a CRT, that is a narrative in which I can use on my lower time frame, and this narrative was simply this particular range 2, right? And I was trading this particular candle. Remember what I said, before you even think of trading CRT, ask yourself, which candle am I trading? If you can answer that question, then you should think of trading CRT, right? This is a scalping strategy, so you guys should be focused, avoid any distraction. This candle was the candle in which I was interested in trading, right? Okay. The next step was now to trade this candle. Let me put my line to trade. This was a 6 a.m. candle, right? And that is one of our high probability trading candles. And you guys know, based on 159, 159, 159. So let's say the first 2 hours are always the best to trade. So that is it. We got this particular bearish candle that was actually our distribution candle based on AMD, right? We got our accumulation manipulation now. This candle was the one that was supposed to distribute. Okay, I then went to the 5-minute chart, right? I went to the 5-minute chart, and what was I doing? I was looking for a liquidity sweep, or we can say a model number one, in order to trade, right? Okay, based on this particular explanation, let me make some adjustment. You got this particular sweep up here. You got this sweep up here, which we can actually say our total week sweep. So the market sweep this swing high with the wicks, right? Total week sweep, right? And then the candle that actually swept it got engulfed, right? Our If the candle doesn't get involved, then that is not valid one. The candle got engulfed with the preceding bearish candle that followed. Okay, when the candle got engulfed, then I then position myself on actually the start of that other block. The start of that other block was my point of interest, where I was interested to sell. That was it. My stop loss was about 50 pips, like that. So scalping, I always like to have my let's say minimum stop loss to be at least 50 pips, not more than that. Okay, where do I move my stop loss to break even? As soon as we make 50% of that particular wave, then you can move your stop loss to break even. 50% of the range, you can move your stop loss to break even. If it doesn't reach 50%, don't actually move the stop to break even. Looking at the particular risk reward, you could have seen that it have already reached 3R. Okay, let's say you were targeting the full range, then you could have made 300 and something pips just from scalping, and this is a 6-hour trade, right? Okay, this is for the example of the 4-hour time frame, combining the 4-hour key level with the 1-hour narrative. It gave a 6-hour, 6 hour. That is a 6 times 1. So what we are risking, we get it 6 times. So that is what actually happened on this particular trade. Okay, from this explanation, right, it is very clear to you guys that whenever you use the 4-hour key level and the 1-hour narrative, then you can position yourself on a 5-minute chart. What I want you guys to understand is that this particular type of trades, right, they have to be familiar, right? They have to be the same on all your trades for the year, not only for the month, for the years to come. When you take these trades, right, ensure that they are the same things that you are gonna be taking for the rest of your life, right? When you wake up in the morning, you look for this. If you don't see it, you chill, and then you leave. You don't have to force yourself. You don't have to force the market. The market is not there to check about your emotion. No, 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 no. The market doesn't function that way. It doesn't check about your emotions. You get? Okay, let me look for another example on the 1-minute chart that you can probably use it as your entry. Okay, this was Wednesday. Today was Wednesday, and then this was this particular trading range here. We got this particular trading range here. right? And we got this CRT high and the CRT low. 50% of the CRT is almost our first target. Okay, you can see that this particular CRT wasn't on a 4-hour key level, right? Okay, based on that, what you could do is you go to this particular trading range and go to the 4-hour time frame. Sorry, you go to this particular trading range and then you go to the 15-minute time frame, right? On the 15-minute time frame, you see that was Wednesday. On the 15 minutes time frame, what do you do on the 15-minute time frame? You look for a valid narrative on the 15-minute time frame. A narrative, like, you can use the if then principle, right, on a key time. So today this was around 3 a.m. That was around the 1 a.m. CR tomorrow. Then you can just look for a valid for instance, here you got this particular narrative, right? Also got it here. This was the narrative. You just come here and then you mark that low as a key level, right? And then you wait for this particular candle, because this candle is a candle you are supposed to be trading, right? You are not actually trading this entire trading range, right? You are not trading that entire trading range. You are looking for that. You are looking for a 15-minute range, since you are using a 1-hour key level. You get. You are using a 15-minute trading range, because here's how it works, right? Key level trading opportunities work in two ways. It's either you trade the bounce from the key level or you trade the journey from the key level. And when you are trading the journey from the key level, it ensures that the market makes a pullback back to that candle that actually closed below it. That is the candle that you are going to call your key. You are going to call your key level as well, and you always have to follow this particular pattern. So on the 1 minute chart, let me put a line there so I can zoom backward. If my free plan can allow me to reach there. Okay, this is the 1 minute chart, very similar to the tick chart. uh this thing is not actually complicated. The people that will teach you it are the ones that will complicate it for you. So if you lock in 6 months, focus on this particular setups, you are going to be actually successful, right? Okay, let's say you were at least we were looking for a scalp, right? A scalp, a quick one, right? You could actually probably, okay, got a model number one here. This could be our targets. We are targets. We are targets, and then this is where you have to wait for a sweep. Wait for a sweep here, and then let me explain something to you guys. Risk to reward has to also be part of your trading plan. If a risk to reward doesn't make sense, it doesn't worth it for you to even take the trade. So you can always skip. You must not trade when you don't see a good, powerful opportunity. You must not trade. So I will not actually take this particular trade. It doesn't make sense to me. So just for you guys to learn, right? It's not a big deal. It's a big deal. Okay guys, this is the end of the video. I don't like making my videos too lengthy. The basic concept is that I've explained it already. So a quick recap: when you're using the 4-hour key level, you use the 1-hour narrative and then you position yourself on a 5-minute chart. If you are using the 1-hour key level, then you position yourself on a 15-minute chart and then you use the 15-minute chart as your key level, and then you position yourself there with the narrative on the 1-hour trading range. Then you target the candle of the 15 minutes. So you trade candles. CRT simply talks about candles, not about any type of ranges. You focus more on the candles. That's where your success lies. So as a scalper, don't waste time. ASAP, you see opportunity, you enter. You don't see it, you sit aside. You take one trade per day. And when I say one trade per day, that doesn't mean that you must take a trade. If you don't see a trade, it's totally okay for you not to trade for that particular day. Okay guys, if you enjoyed the video, please you can consider liking, commenting and subscribing. Share the video to everyone you know, and it's going to help the algorithm to notice the channel. So I love you guys. Peace out.